but you just have to go after what that market is calling for, and you have to adapt for that market. So right now we're going into a buyer's market. Right. It's going to happen.
Nice. So if you
spilled your tea.
That's probably the economy.
It's the economy. That's what I was trying to show you guys. This is what's happening right now.
Right. Welcome to The Remix, the video podcast that keeps you in the mix of everything real estate. I'm Noelle Freisen.
And I'm Eric Anderson. And today we're going to talk about how to survive the recession with multiple income streams.
It is coming. It is coming. The recession is going to be here.
And don't be afraid.
But first, and this is important because each person on our power panel is going to give you a way to weather the storm. Let me introduce our power panel. First, we have Nima Mary. He's our legal eagle. He is the managing partner at a Mary law firm. Next, we have our flipper investor. I was going to say our flister, but our flipper investor, Omar Sharif. He is the VP of Alexander Anderson Capital Group. Next, we have Adam Sperber. He is our residential expert. He's the VP of Alexander Anderson Real Estate Group Residential. And we have a very special guest. We have Omar Juarbe. Did I say that correctly?
Yes.
Juarbe.
Do we have two Omars?
We have two Omars.
Are you guys going to fight? Because I can only do one.
That's why we put them really far apart from each other.
So Omar is with State Farm Insurance, and he is going to give you some really interesting ways of, one, making and creating wealth during a recession through insurance, but also he does both. He double dips. So, we're going to find out how to dip twice.
Investor and insurance agent.
Yeah.
So welcome to our show today.
Welcome.
Thank you.
Why don't you tell us right now about what kind of investment you are buying?
So currently right now I'm purchasing a commercial space for, to really diversify my current book, so to speak. I've been an insurance agent now since 2013 in Connecticut. Opened up my second office here in Hackensack, New Jersey. Very excited to be part of this Hackensack family. I mean, I feel like
we're happy to have you.
Hackensack is amazing. Hackensack,
We'll see how
New Jersey.
these contract negotiations for this commercial property go. Not that I'm involved in any shape, form, legally, but
yeah. So it's, but I'm really excited about this commercial space I'm buying. It's going to be, I have a commercial property in Connecticut, but I use it for my current office location. But this one is going to be for investment purposes. So it's very excited to see.
So why are you doing it? So do you not make enough money as a State Farm agent?
Why?
Did you ask him if he's poor?
I felt like
the thing is that with State Farm's been great. We just celebrated our 100-year anniversary. I was in Vegas last week.
I think I funded it based off of my premium increase.
Yeah. Thank you. Appreciate it. But yeah, no, it's State Farm's been great, but you just never know when things can, as a small business owner, things can take a sharp turn, and the insurance industry, I mean, I find it to be kind of recession-proof, because regardless of what's going on in the economy, you have to have insurance on your vehicles. You have to have insurance on your home. So it's not 100% recession-proof, but in 2009 we didn't do so bad.
Well, first I want to say, everyone stop panicking. Okay? Recessions come. I've been watching a bunch of podcasts and reading articles. Recessions come.
Excuse me?
I read.
Our podcast, I hope, is the only podcast you watch.
On repeat.
Wait, let me.
It's going to family therapy and being like, so I'm sleeping with a bunch of other men too. But
recessions come every 5 to 7 years. Okay, they've been doing that for the last 150 to 175 years. Every 5 to 7 years, recessions come, things clear up, and things get better. Then people are excited, then they come again. Between 2008 and now, it's really the longest time in our recorded history that there hasn't been a recession. So it's about time, guys. So let's weather it. Let's figure out.
And now with the big interest rate hike that just happened.
Yeah.
Was that the largest in how long?
In
28 years.
28 years, yep.
28 years. So everybody is feeling that, and if you haven't felt
Pop
it yet,
quiz.
you're
What was the
coming.
last year?
28 years
94.
ago.
1994.
1994 was the last big interest rate hike. So how
Do
old was
math.
I?
Did
Oh
you
my
do
God.
math or you just know that?
So
I think most of you are screwed, by the way.
No.
So I don't think you're screwed. But anyway,
neither.
so what about that investment property? What is it going to do for you?
Well, it's going to bring another source of income for me, right?
Okay.
So it kind of insulates me for if something starts decreasing here, I'll have another source of income with my commercial property.
Okay, so one great idea, invest in other properties. Everybody out there likes to invest, even if it's your main job is not investing in real estate or not being a real estate agent. Having a multiple income stream scenario like Omar has is an amazing opportunity. So that's great that you're starting that. So now tell us a little bit about what it is to be an agent as far as an insurance agent. And can that also be another source of income? And I know that our school right now is coming up with a program to license insurance agents as well.
You will be able to go to recareercenter.com and you'll be able to get your insurance license in addition to your real estate license.
So how hard is it to be an insurance
become
agent?
recession-proof.
Is that a good income stream for someone who maybe is a real estate agent or is an investor and is looking for another source of income?
Yeah, I mean, definitely. It's, with insurance, there's, as long as, you have your customers that are renewing their policies, you get residual income. So what happens is every single time someone renews their policies, you get paid again, right? So we're very incentivized to provide really good customer service, really help our customers, because as long as you stay my customer, I get paid every 6 months. So it's a great source of income. You build, you continue to build that clientele, and you'll always have that residual income coming in for you.
Maybe I should get my insurance license every 6 months.
This would be great if it happened in real estate that way. Every 6
Right,
months you
every
live in the
6
house, I get a
months.
check.
Doesn't it happen in
Does that happen every
commercial, though?
12?
It can happen. So in commercial, when you lease a property in a corporate setting, depending on how many years someone stays there, the landlord may either pay you up front or he may pay you over that time period, which becomes like an annuity. And then depending on whether or not you have a fee for a renewal, when that tenant renews, you'll get another check. So super, super exciting. So, and also insurance is a great tie-in because you also get to meet people that own properties.
Yeah.
Right?
All the
So
time.
you can find out, you must run across people that are looking to sell all the time or looking to buy or having a distressed issue.
Yeah, I mean, we've seen it all. I mean, we've seen, we're usually there when people are having catastrophes, right? Either they're having a financial catastrophe, they're having, or maybe they just had a fire and they lost everything, so we're kind of showing up in those moments, but, and we're always trying to discover what's going on in the person's household.
Great piece of land you want to sell.
How often, so you brought up catastrophes, like, is that a good opportunity? And I know as an agent, you may not be able to go after something like that, but do a lot of people, once they have some kind of massive claim, do a lot of people just bail and sell and get out?
No, actually most people, because it's actually, once the catastrophe happens, they're going to rebuild your house back to the way it was. But usually they can't do that, right? They're going to use brand new materials, so you're getting a brand new house. Most people actually don't sell after a catastrophe like that because they're kind of brought back to their original state, but it's, now you have a brand new house. So most people don't sell, but we've seen back in 2009, I was actually a team member for an agent, and we saw what the recession, basically a ton of people start shopping around for insurance. They start looking for ways to reduce their policies. But also, we did see a lot of people losing their houses and calling us, hey, we're going to be short selling our house. We're going to be, we as insurance agents, we don't get involved with the process and things like that. Because it would create a conflict of interest for me to try to, take advantage of a situation like that. But,
Call me.
But they use us for as a resource, and we give them and we try to point them in the right direction. And
Down the street, 58 Main, third floor.
exactly.
Well, you guys, and I want to make sure
Scrooge
that
twice.
as we go on, we tell our viewers what they need to be doing now. So what are you guys doing to prepare yourself now? And then later, I want to hear what you did back in 2008, because that obviously worked.
You should be fire selling your properties and
What's fire selling your property?
just unload them for as cheap as possible. The end of the world is coming. My email address is and Mary.
No, really.
I can save you from this
So
catastrophe.
Actually, he's serious because he is offloading some properties right now. But what do you think is the right move with your real estate investments right now? If you are an investor,
Come work for Omar.
Right.
So look, guys, it depends on your business model and it depends on what you think you want to do. So I am unloading because I see almost you have to draw it, right? So I would submit, actually, it's not 5 to 7 years. I think it's every 10 years
Okay.
is the cycle, right?
Not the article I read last night, but
Yeah, so we're gonna not
ahead.
go to not Yahoo News anymore. So it's and we're past that 10-year run. We're actually on year 12 right now, or 13. So that's a significant 30% difference. So typically what happens is you see it climb, right? And we sometime around 2020 should have begun to see a falter off or a slowdown, but because of COVID and the surge of money that the Fed printed, you saw this just once in a lifetime, guys. This will never happen again in our lifetimes. Run. I mean, that's exactly what this is. Things that are not justified by metrics of valuation. So you have this run, and where we're at today, so we kind of climbed. Now everyone realizes, well, the Fed realizes that they had to raise inflation. So the price of things, raising interest rates basically makes a $500,000 house a $600,000 house.
Sure.
right.
Because that 2-3 points in interest total
Makes a big difference.
is almost double your mortgage payment, right?
the
So
other way around, a $600,000 house becomes a $500,000.
Well, no,
No.
it costs
No.
you more to buy
It
it.
costs you
No.
more to buy
But the
it.
value does go down.
value goes
So
down.
if your house is listed for $500, your monthly payment on that $500,000 house last year to this year is almost half,
Yeah.
right? So that $500,000 house is the equivalent of buying almost $1 million house last year,
Right.
Your buying power is really cut in half.
which
so
lowers the value.
You see, to a certain extent, but with inflation, and this is probably we should have an economist on one of them. It doesn't trade the same because with inflation, you also see that price homes will rise because of the loss of the value of the dollar. So we're in a weird tundra. And
So
we're going to
you're
fly.
actually taking away an income stream by selling those houses.
No. So what I'm saying is, so you're running up, right? So we hit the peak. Now everyone's kind of realizing, oh shit, and you're gonna have a drop off, right? This is my opinion. So that drop off is people start slowing down, the market slows, people get scared, they drop 10, 15%. So you're gonna see a small drop off, and you're gonna see a lot of institutional people and other people think, okay, well, this is the dip, let me buy it. Kind of like any stock, and you'll see a little bit of a jump again, surge, and then in my opinion, you're gonna see a woo. But before
So
that,
you're waiting for the woo, so then you can
No, he's
go
no,
and buy.
he's getting out now.
I'm not at the top. I missed the top by 2 to 3 months, right?
Okay.
I'm at the beginning of the drop, right? So we have two schools of people. Those who are like, no, it's fine, hold, it'll go back up, rates are steadying, or properties will stay. Like you just read all these stupid articles where someone's like, well, no matter what, there's still, no offense, there's still a shortage of inventory, so prices will hold, right? You don't know. We don't know what's gonna happen because it's driven by human response. And once a certain percentage of people start acting in a certain way, whether rational or not, the rest of everything, it follows because there's a panic.
So you're selling off to liquidate.
I'm selling on this dip, and I'm not selling multifamily, commercial, things like that.
Okay.
Single
I'm
family.
selling single family residential.
That's
which
important
have hit its peak.
to hear.
But how is that affecting your multiple income stream today? Because you're giving up income on those properties.
No, because I'm getting. So if you buy a property, assume it's a 10 cap, right? I'm basically putting myself 10 years forward. Because if I waited 10 years, I would be at where I am by unloading it today. Because that income stream, instead of waiting for it to come in slowly, I'm surging myself with it
Got it.
in an instant shot.
So you're changing your strategy, and that's your income stream because you're taking that income today by selling that property.
I'm moving it by virtue of a 1031 exchange. So I'm not cashing out and taking capital gains on it. And I'm looking for alternate opportunities in a different sector, which is more inflation proof.
And what sectors are they?
Like commercial property, multifamily, right?
Multifamily.
3 units and up. because those, no matter what happens with inflation, if you're buying it at the right price, you are getting income, like you said, a stream of income from it. So the value of your property fluctuation doesn't matter. It goes down 20%, it goes down 30%. None of that matters as long as your income stream covers your debt and gives you a certain percentage of return.
Because someone always needs to rent.
On your original investment, right? And the housing demand will always be the housing demand, right? So that won't change with or without inflation. So I'm moving from what was a strategy of single family pumps to long-term holdings, which will have a residual income. But the strategy also comes with more risk, because with those larger properties, you're talking about larger purchase prices, you're talking about higher debt ratios, you're talking about being able to maintain those properties through the inflation.
Right.
So you need to have appropriate cash reserves, which is also a part of my strategy, is shoring up my cash reserves to be able to withstand this inflation in the event that those commercial or those residual income sources are affected. You need to be able to have, like a squirrel in the winter collects their nuts. You need to collect your nuts.
Good. So now, Omar, how does this change? How does this change your strategy, and how does this recession affect where you see flipping going? And do you see this as an opportunity to do more flips?
Sure.
Are people going to be, as Omar over here said, people are going to be having issues and starting to sell? Where do you see that coming out?
So I think, similar to what Nima said, it's a time to unload your flips for sure, because during a recession you want your cash reserves to be much higher than they were, so you can start purchasing properties at discounts and take advantage of what the recession brings. But in terms of flips, I think if people continue to do flips, you just have to buy them at deep discounts. I've seen that in the last recession, people still did flips, but they were at extreme discounts. But the market's definitely changing. So I wouldn't get into flips thinking I could get top dollar like people are doing for the past year, 2 years.
So if I can add to that too. So one of the things that I'm doing, and this is really an important point, is 3 months ago, and Adam, you could probably comment on this too, you used to list low to cause bidding wars to get people to go over. Like, my current agent believes that, you need to do that. And my opinion is, no, that market's over because the psychological infallibility of real estate is now cracked because of the Fed's raising rates.
Yep.
So people are now emboldened that it's a buyer's market. It hasn't yet become a buyer's market because it hasn't been long enough for the sellers to be in dire need of a quick sale. The only difference I think you'll see temporarily is where things were on the market sub 30 days, you'll go back to having roughly it on the market for 60 to 90.
Well, one reason why the sellers aren't thinking it's a buyer's market, or people aren't thinking it's a buyer's market, is because of inventory, right? There's still not
Because
a
there's
ton
still
of
low
inventory.
inventory.
No,
right.
Even if there's no inventory, guys, that to me is a non-factor.
Why? If there's nothing to buy, then there's nothing to buy. Trust me, I've been trying to buy,
Sure.
right?
There's nothing to buy, but that's not, the factor rate is still people being able to afford, right? So even if there's no inventory, before money was free, if you ran up $40,000, $50,000, your net monthly difference was nominal. It didn't matter.
Yeah.
At this stage, you now are borrowing money at real interest rates, so you have to think about every $10,000 what that monthly nut is on your mortgage, right? Most of you are on fixed income salaries, so you don't have that room. Let me give you an example. If you buy a house and your interest rate went from 3% to 6%, right? This is what's called post-tax money. So for every dollar, you take home, say, 70 cents, right? That's what you pay your mortgage with. It's post-tax. So you literally would need to double your income to justify the change in spread if your budget will be the same. Because if your mortgage goes from $2,000 to $4,000, that's an additional $24,000 a year. That additional $24,000 is post-tax. That means your income would have to go up roughly $40,000 a year for you to make that $24,000 difference. Right. So your inventory will still be what it is. You're still just gonna see a major hold on people and calculating what they can afford. So your listing prices now, like, I'm not listing low, I'm listing what I want, because maybe I'll get even offered lower currently. but maybe I'll get offered more. But I think that the bidding wars will maybe be a $5,000-$10,000 spread at best.
It won't be 100,000, 200,000.
chance.
And it also depends
Yeah.
on the market and where it is.
But you also have
Yeah.
you also have
Yeah.
a lot of buyers. Everybody's looking at, the big thing on the residential end especially is they're looking at the interest rates. Right now, like my interest rate on my house is, 2.75, which wasn't even the bottom. It's a 30-year fixed. I told my wife, we're never selling this house. That's an amazing. We're never going to see a rate like that again. Now it's easily double that. So like Nima was saying, so you're seeing a lot of people coming into it and they're worried. Like what do you do? Do you go and do you buy property, buy your or do you wait? Like investors are waiting. I have a lot of investors that are waiting right now and they're on hold because they're like, well,
Are they waiting because they just want to see what's going to happen? Or are they waiting because they think it's going to get better at some point or it's going to get worse? And I don't know.
kind of all of the above.
Okay.
Because so they're waiting to see what's going to happen, see if the rate stabilizes and things like that, which they've already said that they're going to keep raising the rate. It's going to happen. They're also waiting to see if the housing market catches up to interest rates. Because right now, you still have relatively high housing prices and a high interest rate, which typically doesn't occur. But like Nima said, we also have high inflation and other things that are factoring in. But then the other side of it, they're waiting to just see if the housing drops, if more comes on the market. There's a lot of uncertainty right now.
So where do you see other multiple income stream opportunities?
Well, so when it comes, when it comes like on the residential end, my take is you have to kind of go after the market that you're in. We've been in a seller's market. I do generally represent more buyers than sellers. So I've done, I've had a very successful few years, but I would have been much more successful had it been a buyer's market. So to me, I'm okay with it flipping. But you just have to go after what that market is calling for, and you have to adapt for that market.
If you were in a buyer's market before,
Yeah.
right? So let's look at it this way. So if you were in a seller's market and you were a listing agent,
Yeah.
would you be changing your strategy to become a buyer's agent right now?
You have to.
Okay. So
Well, no, you have to do both though. You got to have a mix. You can't just do one or the other. Because if you just do one or the other, like there's always going to be a time when you want to represent a seller. There's always going to be a time when you want to represent a buyer.
Sure, but where would you focus? Because again, if you're used to doing things the old way, now the recession's here. What are you going to do differently?
Like what's going to happen is I have a lot of buyers that were holding off. So now is my time to go back to, once things change, go back to them and say, okay, now we're in a different market, prices are lower, things like that. And now is my time to target those people, especially cash buyers that don't care about the interest rates. If you have cash, it's awesome because once the interest rates go up and the housing prices drop, just snatch up every property you can and definitely, just try to have reserves.
So would you say then your new strategy would be going after cash buyers, and then if you were a listing agent, you would start to focus more on the buying side?
Yeah.
Okay.
Can I just say something though? I know for a fact that you've dabbled in commercial deals before, right? And one smart thing that you did, Omar Sharif, is
Omar,
that
one,
you
yeah.
are with Alexander Anderson Real Estate Group, which allows you to do both residential and commercial, which
Yes.
sort of builds in a little bit of recession-proofness into the whole real estate agent equation.
Correct. You shouldn't, but that's a great point. And that's one of the great things is that, I have the ability, I'm not like just doing one thing. If I come across a commercial opportunity or if I find that the commercial is doing better, you can kind of adapt based on what works best. You're not
have
kind
to
of
adapt.
in one.
So diversification. So in your marketing techniques, you're going to focus more on the cash buyers, but then you're also going to open yourself up to maybe doing more commercial if the residential market tanks.
Exactly.
Okay.
I think Eric, to your point, there's more diversification in industry, right? Like getting an ancillary license in something like insurance. Because whether the market's up, down, whether you're recession or not recession, people every year need homeowners insurance. And actually, Omar, correct me if I'm wrong, but most people switch their homeowners insurance after a year or two because that's usually when you get whacked and people just become on repeat. And savvy investors will move policies around to keep their rates lower.
Not at State Farm.
Yeah, I was going to say.
Not with me.
Not with you. I'm saying in general.
But in general, what happens is, people always are looking when they're looking to cut costs. One of the first places they actually look is their insurance policies, their car insurance, their homeowners insurance, because they're like, okay, am I overpaying for the insurance policy? So usually they'll give us a call asking, hey, can you guys reduce my premium? I'm paying too much for insurance. So and
what does it take to get an insurance license? Like, what's the process?
So there's basically you do a course, right? You have to do a certain amount of hours of the course. Most companies do a self-study. So it's,
It is, or you can do it online. You
Yeah.
can do self-study online,
Online.
and you can get that all at recareercenter.com.
Yeah, no, and you know, you go through the process of self-studying. You do the hours, you do a certification, and then you take a state test with the Department of Insurance. And then basically, once you pass the licenses, that's it. I mean, I have my team. They usually get fully licensed, pass all their licenses in a month, and then they're basically
Quick.
ready. Yeah, it's quick.
So this could be a nice avenue for some real estate agents who are just getting into the game. Things are
Yeah.
slowing down. They don't have the necessary knowledge to jump into commercial. Maybe it's still staying in the real estate industry,
Yep.
but just having another means of making money.
Yeah, it's a, and once, you know, depending on the company that you're with, you know, once you build up that client base, you know, you have a little bit of a residual income there. I mean, I know some people, not with State Farm, because we're considered what's called captive agents. If you are an independent agent, then what happens is you are able to build a book, still work with multiple insurance companies, do your real estate, and what I like about the insurance industry, it can kind of give you a little bit of insulation, right? So I know with real estate, it's you only get paid when you sell,
close.
right? When you
Unless you're an
close.
investor.
Unless you're an investor, and then, but with insurance, as long as you have your client base that you're always helping, you have that income stream always coming in, and then you know it kind of gives you a little bit of security, so to speak.
So you're diversifying by going out and buying investor properties. You're diversifying. You're looking for cash buyers, and you may be looking at some commercial stuff. So, Omar, our flipper. So let's say you were just a house flipper, and all you
Yeah.
were doing was house flipping, but you had that amazing talent of design and all that stuff.
Sure.
Would now be a good time to start thinking of becoming a contractor as well?
Yeah. So I mean, the way I look at a recession is services are still needed. It's just the demand changes and shifts to different industry, different niches within real estate. So if you're good at flipping houses, there's no shortage of people who will still renovate their homes during the recession. And then not only that, but if you're into flipping houses, you have access to capital. And it's a perfect time to start raising more money, which is what we do at the Capital Group. Because when a recession hits, investors look to real estate because that's when real estate prices come down. And not only that, but they look to get the money out of the stock market or crypto and put it into real estate for more secure returns.
Okay.
So a
Well,
recession,
everyone wants it out of crypto.
Yeah.
yeah.
You sent that meme where it was like crypto's dead and real estate is like hi. Right?
Yeah.
We're waiting for the crypto bros to start
Right.
short selling their properties.
Right.
Yeah.
Right.
So you're saying actually not only to expand and become a contractor for others, but you're actually saying to go out and maybe start looking to raise money.
I think a recession is probably the best time to start raising money.
Well,
Okay.
funny
Well, what do you
say-
do with that?
Well,
Boats.
you balance the both between finding deals that are being discounted because there's a recession and people who are looking to get secure returns from somebody who knows what they're doing in real estate.
So now you're going to take one of your focuses. That was already a focus, but someone, let's say, who was just a real estate agent but has that expertise
Yeah.
in flipping houses or has that expertise in real estate, could now go out and start sourcing money and getting it out of the stock market, which is what a lot of people may be doing at this time.
Yeah.
And using that to create a whole nother business for themselves.
Yeah.
Okay.
Well, it's funny that I was listening to a loan officer of someone in banking the other day, and they were saying that the difference between the 2008 recession and this recession is that the 2008 recession was built a lot on collapsing credit, right? It was built on a lot of people defaulting.
Yeah. What's the movie?
Short, The Big Short.
Yeah, The Big Short. Well,
Yeah.
there's also another one, but yeah. So exactly. Sorry, on your point, that's exactly because that was like I don't want to say they gave everybody with a pulse money at the time.
Right.
I am seeing houses under appraised. I am seeing people get denied. I'm seeing people have issues. Then they would say, "Oh, you want a 3 million?" I could have gotten any house I wanted at the time,
Correct.
and they would have just given it to me because
But
they didn't.
now it's not based on that. So banks and places where you would acquire money, you would source the money, they're actually not stopping giving out loans.
So they're not, but a big part of it is adjustable rate mortgages. And when they're set to reset and interest rates just jumped up by 3 points, those people are going to start losing their homes.
So in addition to that, right, so it's completely different from 08. It's not comparable. Anyone who wants to compare 08 to now, that's like an entire podcast that we can just discuss.
But that's what we've been alive for. Or that's what I've been alive
Yeah, but that was just
And
because it was the last
anyone-
recession. But it wasn't. What Nima said.
I'm
It's
not calling you old.
No,
it's not the same situation we're in right now. Right now, we're in a traditional, just up and down cycle, like you see in the stock market, in any market, if you follow it. Back then was due, I really do feel it was due just to giving out
Stupidity.
bad loans.
There's so the whole issue was effectively, you can't sum up 08. It involved subprime lending. It involved a lack of regulation on banks and Wall Street. I mean, it was a perfect storm in its own accord. We have a different perfect storm now. This is nothing like 08, only in the sense that the factors are different. The approval rate for mortgages are still different. So the people are more qualified. Those things don't change, right? The valuation is not that big of an issue that everyone's making it out to be, or the appraisals, no offense, but I'm not looking at it from a real estate perspective. It's simple economics. If you're locked into a mortgage for the next 5 years, even at a minimum at an ARM, most people have fixed, right? So those 5-year ARMs are not really that prevalent anymore. If you're still in a fixed mortgage, you base it off of your current income, you'll be able to afford it in 5 years. The fact that your house goes up and down 100, 150,000 doesn't affect that, because you got your mortgage based off of the otherwise ability to afford it, irrespective of the value of your house. So that fluctuation won't affect people. Whereas before, people got mortgages not based off of their ability to afford it, fake tax returns, a lot of other stuff.
Well, that's because the market kept going up and people had no choice.
No, it's because there was
You
no
want a
regulation.
house and the prices keep going up. What do you do?
Back
Buy
then.
it. You still buy
What'd
it.
you
You
do?
still have to buy it.
No, well, back then, even if it kept going up, it didn't matter. You wouldn't qualify. So the people who were qualifying and getting mortgages did not have the financials to back it up. Whereas today, the banks require it. There's a substantial statistical difference in approvals, disapprovals, and equity. They say, statistically speaking, on average, people have at least $150,000 in equity in their home, right? Because of the larger down payment requirements, unless you're FHA or things like that. Most people now are 20% down. You just have a larger equity standard, where before they were lending more. You would need an entire economic lecture to explain 08. This is not 08. People who tell you it's 08, anyone who even talks about it, you should immediately be like, you are stupid and you're telling me bullshit, and just stop listening to them.
Oh my God.
Not you, 'cause I'm not saying you compared it. No. You're not comparing it. That's not what I'm saying. But I've seen.
Noel just walks off.
I know.
I'm not talking about. No one knows I'm not talking about her. I see people like they're having their own like things on LinkedIn, and they're like comparing it to 08. Like, no, you're just not. It's not. You're an idiot. Stop comparing it to 08. Right? Like, of course, every 10 years there's a change in a cyclical cycle of economics. You have to, if you want to do well, everyone will survive. No one's going to die. If you want to do well during a downturn, you have to just look to see what's causing the downturn and find a way to make money during that time.
Great.
Right?
So give us some other income
Because
stream.
So we talked about it.
wanna create wealth.
Doing ancillary things like insurance or buying stocks. I know the stock market's going down, but we had a financial advisor here, if you guys follow this podcast, who said certain stocks give out dividends, right? So you buy those stocks and you collect on the dividends, which gives you a certain rate of return, 6%, 7%, 8%. And you can go back and watch that earlier podcast. I think he actually listed certain stocks that are good investments to buy, which will give you a dividend on your investment, and wait for the opportunity to buy a piece of real estate that comes around that's commercial for residual income. But look at different means of employment. Get an insurance license. You now know how it is. Or alternatively, what's some other licenses that you
Get a
know?
mortgage
that-
license.
Yeah, you can get a mortgage license.
Get a mortgage license.
If you disclose it, are you allowed to do your own insurance for a buyer of yours?
So basically, at least with State Farm, we've actually partnered up with a few other companies. We can do mortgages. I haven't gotten my mortgage license yet, so I haven't.
Oh,
started
once we
doing
get
that.
mortgages, you'll get it with us.
Yeah. So
RECareerCenter.com.
yeah. So we've partnered up, because State Farm as a company, they're also trying to diversify, right? And they're linking up with Rocket Mortgage to do mortgages. We're linking up with Jackson for annuities. Like it's so many different things. Like even on the corporate level, they're trying to diversify their income, because you just never know.
See, I think, Omar, what were you saying about everyone being screwed if they haven't started?
Yeah, so what I meant was
Just put it out there.
But if the recession hits and then you're asking, how do I create multiple sources of income now? You're too late.
You're too late.
But the recession hasn't quite hit yet, right?
It's here.
Yeah, so meaning it takes time to
beginning.
create multiple sources of income. You can't just get into it.
But better to know now and start.
Agreed. And game plan and figure out what you can do. So, in terms of
But new and improved, Omar, is something that you can do, right?
So I'll tell you a
insurance,
little bit.
yeah, but true. Getting your insurance
I
license.
just caught that.
are you going to move your business into that building?
I'm not sure.
Oh, I thought you were going to. No?
I've been thinking about it.
Okay.
But actually, I spoke to my accountant yesterday, and she was giving me some recommendations.
We definitely don't want that.
yeah. And I was, she kind of like made me think about it, but we'll see. But I wanted to kind of, to Omar's point of like, so it's funny because in 2008, 2009, that's when I was like around the time I was graduating college. So it was like, okay, the recession happened. There was really not a lot of opportunity for, a fresh college student. Like, well, at least they said that there wasn't a lot of opportunity, but
no, without capital, there wasn't.
Yeah.
If you had money at that time, you built institutional wealth. If you didn't have capital, your opportunities were limited.
Yeah. You really had no opportunities. But what happened for me was that I started seeing that as like, I actually bought a condo. Right, this was my first property. I was like, okay, I'm gonna.
He bought a condo.
I bought a condo. I'm like,
that's
21
so cute.
Out of all my friends, I was the only one with the condo.
Did you have a dog?
No, I couldn't
also
afford a dog.
Your condo. IKEA plant.
But what happened was that was around the time where like the whole opportunity where like I think they were giving some kind of big tax credit. For buying a property, so I got
that too.
Yeah, I got the tax credit, and so I was like, okay, this is a great opportunity for me to get this tax credit. I'll buy the cheapest condo I could find. I mean, it wasn't a good investment. It was I didn't buy it in a good
selling
place.
crack out of it. Now he's got a commercial building.
It was like $8,000 credit.
Yeah.
We're not suggesting that crack is another multiple.
No, definitely. That's a declining industry according to Netflix specials I watch.
Everything must be above board and legal, guys.
So I think it's an opportunity for a lot of people to really see, okay, if you're kind of at the beginning of this and you're going to see, okay, towards the end of the recession, you're going to see opportunity, and you're going to be able to, if you have time on your hand, if you're let's say in your 20s, this is a great learning experience because then 10 years from now, that there's going to be another recession coming and you'll be prepared. So maybe you're not prepared right now, but you start the preparations now, so that way when the next one comes, which we know eventually it will happen again.
Does anybody know how long? I mean, I know 2008 was kind of an outlier because there was a lot of issues that occurred that caused the recession. How long it actually takes to recover?
3 years.
Is it 3 years?
It takes 3 years to your point, but depending on how severe it
Takes
is,
3 years for him on the toilet. Anyway,
and reading picture books.
It's where I hide from my kids. So yeah.
So right now you mentioned if you have cash is king. So let's say you're
Not
lucky.
though. It's an inflation. You literally lose value.
When
I
it
bought a
comes to taking
$13
advantage
smoothie the other day, please. No.
When it comes taking advantage of buying real estate, because we talked about the rising interest and we talked about how people are going to try to sell their homes and they're not going to sell. So if you have money right now, would you be investing in real estate as another income stream?
So this is why it's such a weird time, right? Usually, to Adam's point, you have a fluctuation. You have right now really kind of unprecedented, where if you shore up your cash, like talking about me selling stuff, guess what? Your cash is worth less every day because inflation. As inflation rises, your value of your dollar is lost. And that's typically why during inflation, home prices don't drop. Right? Because the value of the dollar adjusts, home prices actually rise. So, but you have this weird thing with interest rates to curb it. So I think right now, don't hoard your cash and wait for buying opportunity because you don't know. We don't really know the effect. Move into a secondary source like commercial or multifamily. Take your cash right now and buy assets because assets fluctuate with inflation appropriately. Your house, if inflation continues, your house price will actually rise. Less people will be able to buy it because of higher interest rates, but because of inflation, the value of your property will rise, right? It's not going to nosedive. Oh, wait, wasn't an inflation issue.
So you're protecting your net worth when you do stuff like
Your
that.
cash, this piece of dollar is backed by nothing. It is
I
printed
know that.
out.
It's not backed by gold anymore, is it?
Hasn't been backed by gold in a while.
in a long time ago.
It's backed by
But
the U.S.
I
government,
was-
but yeah.
It's backed by...
Yeah.
No, it's backed
by
by people believing that it's worth something.
Plus the U.S. military
That's it.
making you believe it.
Do you know? Do you guys know the saying? It's not worth the paper it's printed on.
Yeah.
Yes.
Yeah.
Where do you think it comes from? Right? So the dollar is not worth the paper it's printed on during an inflation. And we don't know. Inflation is not stopping anytime soon. Economists don't know. So don't guess. Buy assets. Don't think that, okay, well, this property's too high or I'll buy it cheaper. Guys, because guess what? If the property goes down $50,000, but your money is worth 30% less, 25% less, that 10% adjustment in the purchase price of that property doesn't offset the 25% loss in the value of your dollar. It doesn't. Take it, And to Eric's point, to Omar's point, invest it in a business. Take your cash, rent a space, lock in your rent, create a new business for a secondary income market. Contact your broker and say, listen, look, we all know that residential is going to have a hiccup because it's just a weird situation. We can all agree on that. We don't know anything else. And if you listen to a bunch of economists, I read a really interesting statistic. Most economists are actually poor. If they're so good at if you're such a good at being an economist, figure out a way to make your own money. Right? Look at guys like Warren Buffett and what they're investing in. He completely adjusted Berkshire Hathaway's investments to go into certain product industries. Look at those investments.
Which
I
ones?
don't know off the top of my head. I took a screenshot. I'll send it over. So I looked to see specifically what is the smartest guy in the world, in my opinion, financially. What is he doing? I mean, dude, his final dinner, he auctions for charity dinner with him. It's around like $3 million, and it's not even near ending because this is his last time he's doing it. Wow. So look what people like that do. Look at the people who have survived and created institutional wealth because clearly they're doing the right things, and most of this information is publicly available. Go into buy assets, but buy commercial, buy multifamily, sign up for a school that has licensing, have that license in your back pocket.
Get
that's
both.
An asset, right? Diversify your mind. Diversify. Get your cash out of your account. It's not worth anything. It's paper.
And if you are a real estate agent and you're in residential, you need to go to Eric's World of Commercial because you need to see what else is in your
We love to
industry.
talk commercial. I mean, commercial
But
has
no,
great
that's super
opportunities.
hard. So you're learning. Like I've seen throughout the course of this podcast how much you've learned about real estate and
I'm a
residential.
sponge.
But you went through the experience.
Right.
But now,
She took my class too.
but imagine commercial's an entirely new beast. So guys, if you don't just say I'm going to switch to commercial. Look at
Not
multiple.
switch, but
Multiple.
learn about it
Expand your
because if
horizon.
that opportunity
Exactly.
comes, you want to be able to,
And
if you
you're-
can't take the whole deal, to participate
Right.
in
And
it.
if you're already in the space, so what I do is I'm already in the residential, not the residential, but I'm already in the real estate space. So I don't go to the stock market like Nima may suggest. I go to other things that are in the space that I already understand, either education or residential or commercial or investing. I expand that horizon because that's where I can be an expert in, and that's where I can learn and get, I think, the best value from my efforts. So I think you should stay in your space.
Well, that's a really important point. And the reason is Eric is investing in himself. People who are already successful, they don't give their money to other people. They don't invest in other people because successful people say, hey, I've gone here, so I'm going to trust my own judgment. If you lose your own money off a bad decision, you don't feel as bad as somebody else losing your money, right?
That's
so
true.
Eric is staying with his own space, and I would do the same. While I'm talking about dividends, that's only because I read and I watched our prior podcast. I too, right, am going to diversify in real estate. I'm getting out of my one families. I'm getting into commercial things, right? So stay in your own space, but find deviations of your space. Like Omar does insurance. That ties into real estate,
Yes, it does.
right? So if you are a flipper and maybe right now the opportunities aren't there for you, Omar talked about it. Go into go into insurance. It's a class. It's not long. Make your money, pay your bills, build relationships for the next 3 years. All these people you're going to meet working for somebody like Omar, think to yourself, let me network, let me design my new network. So when I get back into real estate flipping, I'll know 40 people who have multiple properties and say, hey, I'm Joe. I was your insurance agent. I'm back in real estate flipping like now. I'd love to know if these properties I'd previously insured for you are for sale. Would you be interested in selling any of them?
Or become a contractor and take your flipping expertise and go out there and do it for others. It's a great area.
Yeah, but make sure you're licensed, insured, and make sure you register with the state because it's consumer fraud if you're not a registered contractor.
Very, very, very true.
But I think it's
But don't
easier to
forget,
be an insurance agent than a contractor.
It is, but if you're already in the flipping space and you know what you're doing there, why not do it for others? I mean, people do that all the time.
Another thing, though, I've seen an uptick in people contacting us to become teachers. And that's another thing. If you know what you're doing and you have a instructor's license or you just want to start putting courses out there, I think you can share the knowledge.
Oh, no, I'll be saving that Indeed advertisement money. I see you.
It's just another income stream.
Hey, I've seen an
Go out.
uptick. So, but if people are out there, you're still watching, subscribe. I always want you to subscribe. But tell us in the comments what you're doing to shore up yourself for the
wanna hear
recession.
about it. We wanna hear
wanna
what
know
you're
what
doing.
you're doing, and then we might, talk about it on this podcast.
Or we'll
coming
have
up.
a chat in our comments about it. But also, real estate and being a real estate agent is still an amazing opportunity
course.
to make money. No one is saying stop doing your real estate agent. No one is saying don't become a real estate agent. We're just saying diversify. And Adam, for instance, is extremely busy as a real estate agent. He may
Yes.
not need to diversify. We're just coming here to give people different options of what you can and can't
I think
do.
he was named the top agent in New Jersey, or the top 1%.
Bergen County.
He's
top
a 1%.
3%. He's our 1%. But
Oh, thank you. No, but back to just one other thing I want to mention is we keep talking recession, inflation, and things like that, and interest rates is. Yes, housing prices are high, but we have been historically spoiled with really low interest rates over the last several years.
Yeah.
You go to anywhere else in the world, go to any other time period, like you're talking 10, 15, 20% interest rates.
18%. I heard from someone like back
my parents'
in
first house was like 14, 15%.
Yeah.
So we've been really spoiled. So people are looking at, oh my God, it went from 2.5, which is really low, to 5%. And yes, to
That's
Nima's
normal.
point, that's normal. To Nima's point earlier, yes, it does reduce your buying power. It will. But we're just going back to relatively normal times here. Like this is not, if you find like Nima said, like maybe if you're looking for an investment or something like that, maybe go towards the multifamilies, because if you can make it work now and you can make it work with the rents that you have an asset. It's going to hopefully increase with value as the inflation.
Rents always go up, right?
And the rents go up.
Yeah.
You're covering
Most
your
of the
money
time.
and you're not losing money. Right now, your money in the bank's losing 8.6%? Is that what they just announced the other day? So as long as you're making money, you're not losing money in that sense.
So Crystal did say that she's a notary and now she's going to be an agent. So she's adding to her what she's already doing, and she's adding to it.
Right. So, for instance, when there's title companies out there and they're doing closings, they have people that go out and deliver documents and
The mobile notaries. Right?
well, she's
We
talking
call it
about
the
being a
gophers.
signing. I think she's talking about being a signing agent, which is where you go out as a title person.
No, she's like a closer, right?
Yeah,
I'm
like
assuming
a
she
title
actually
closer.
goes there and
She's
closes.
the one that
Like
does the-
she notarizes, has you sign the mortgage docs, all that. So she's a closer.
But that's a great example of staying in your industry. So
But
that's,
diversifying.
that
She
pays
said,
well.
yeah,
real
she
estate.
said you're right.
It's still
that,
real estate.
that pays well.
And so she's going out there, she's learning more about real estate, she's getting great experience at closings, and that's going to shore her up for being a better real estate agent in the future. So
And build
that's
relationships.
great.
Yeah.
And building relationships. But I still think investing is the way to go. I think you should not be afraid of buying property. I think flipping properties is an amazing way to make money. It's just knowing how to buy, making sure that you're buying at the right price. There's that old adage, you make your money when you buy something. I know you've heard that from me before. I know you've heard that.
Profit when you sell it, yeah.
And you profit when you sell it. So, I still think that, Omar, you can give us some more ideas. Like, how does the wholesaling market, can you do anything there with the recession?
So I think during the recession, the way I look at it, we have to keep the recession is really when the Federal Reserve stops lending money. That's like the definition of a recession. But how that affects us is that people stop buying as much and the market changes. So for real estate folks, that's the time where we could get into investments because property values get down. And it opens up short sales, pre-foreclosures, sheriff sales. And during the last recession, BPOs became a big source of income.
What's
for
a
real estate
BPO?
agents.
Big
Banks were
pop-up
flooded with
open?
so many brokers' price opinion. Not too far off, but
Wait, say that again.
so
I was
BPO
listening to Nima. Say that again.
BPO stands for brokers' price opinion.
Okay.
And
I don't know about that.
I like her definition better.
I missed it. What was it?
I don't just
tell
yeah.
us.
Keep on going.
Flushing.
So what happened in the last recession was banks were so flooded with properties that they couldn't hire appraisers to go out and pay $600 per property or $400, whatever it was, to appraise each property. So they would send agents out to do a BPO and do a quick appraisal, and they'd get paid anywhere from $100 to $150. And there were some agents making a few thousand
In
a week.
commercial, I would get like $500 for one of those.
Oh, would you? All right.
You know, it's funny, Crystal, you're getting, I love that everyone is actually affecting people, because Crystal is on here. She's like, eventually she wants to do flipping and investing, but she's interested in insurance as well. So I feel like at least the conversation that we're having, at least for Crystal, is making her think of how she's going to shore up for the next, 3 years? For the next 3 years.
We have a flipping class coming up if Crystal's interested.
We do. The flipping class is this weekend,
Next
recareercenter.com.
weekend, 25th, yeah.
And again, if you practice what you preach, which I do, and I've always had multiple income streams, I've been doing it as soon as I matured in my real estate career, which was probably about 10 years ago. And if you plan that now, this is a good catalyst. There is a recession, so you need to do that. But having multiple income streams, which I know Nima does, I know you do, I know you do. Adam, I think you're still working on it. But having that multiple income stream via your investing, via your actual career or your job or whatever you're doing, that's a great practice for life. You don't have to save that just for a recession. This is just bringing up the kind of need for it.
Yeah, I mean, you guys have definitely. I'm learning a lot by being here.
Well, you told me how inflation affects insurance. I thought that was sort of interesting.
Yeah, I mean, obviously, so what happens with inflation is that as the cost of goods start going up, what happens is insurance rates will start going up as well.
Does that mean you make more money because they're going up?
Or does that mean
I just saw Omar's hairline grow back. He just gained 2 inches on that scalp.
Well, we have. I mean, what happens is we get a raise, but then we also get a little bit of a buzz cut, as well. Because what happens is, as
I heard Allstate doesn't buzz cut.
Oh, yeah. Well, what happens is that we get as the insurance cost goes up. Obviously, we get paid on a percentage, so that goes up. But then we also lose customers, so it kind of balances out, right? Because we try to, save people money where we can. But I'm very anti-reducing coverages. Because a lot of people are like, oh, can you reduce my coverages so that way I can save money?
Stupidest decision
yes, I agree.
ever.
Not worth it.
Take it from a lawyer.
Not worth
such
it.
a little bit amount of money for such a huge.
Guys, when you get sued, it is a lot, and people, if your judgment is more than your insurance policy amount, they will go after what you own.
Yeah.
It is not a joke. For a couple dollars,
can you come speak to my customers?
Oh, 100%. Yeah, we should. I'll do a seminar for them.
We definitely need
because
to.
It is stupid. People think, dude, downgrade your car, right? Yeah. Don't go on vacation, but don't take away your insurance because that's your protection.
Coverage on everything. I have an umbrella policy. I have all the maximums that I can get.
Literally, when you change your liability limits, let's say for example from 500,000 to 100,000, you're probably saving $30 a month.
Wow.
People
don't get it.
Not anything significant, but you're cutting your coverages from 500,000 to 100. You're reducing $400,000.
So are you saying that the clients out there can't fathom that difference, and when it's explained, they don't?
Are we back to calling people stupid again?
I'm asking.
No. What happens?
Not my clients.
What happens is that the way that most insurance companies in the industry market themselves is cheap insurance. So what happens is that cheapens the value. So a lot of companies, they're trying to make the customers get insurance quick, save money, but it's in their best interest to give the customer the lowest amount of liability,
right?
Because the lowest amount of liability is actually costing the client more, but it's costing the insurance companies less.
I have to say, you are the reason why I have everything insured.
Me?
Yes, okay. The way you got the Phoenix, you had this building, the building burnt down, and now Phoenix is going to rise up from the ashes. It's going to be a beautiful new building. But anyway, his tenants, a lot of your tenants did not have renter's insurance, and in a blink of an eye, their whole world went away.
Yeah.
And you think, well, my landlord must take care of that. No, it's on you. So I saw them, and it was heartbreaking.
I could tell you what renter's insurance.
So cheap.
Let me tell you what renter's insurance covers you. So first of all, most of the time, renter's insurance is $10 to $15 a month, right? Mm-hmm. So if you did have a fire, let's say you lost everything, they replace all your personal belongings, pay for you to stay in a hotel, and if you needed to, for example, so they'll pay for you to stay in a hotel until you find a new place to live, replace all your personal belongings, and if there was any liability, it also covers the liability
for $10 to $15 a month.
Yeah. Why wouldn't you do it?
How many people don't have renter's insurance percentage-wise?
Your smoothie was that much.
Listen,
yeah, exactly. My smoothie was that
Honest
much.
analysis. If you're watching this podcast and you look down and you are making monthly payments on a newer iPhone and you are cutting back from things like your insurance, you played yourself. You are just an idiot consumer.
Yeah. Well,
We need to plagiarize yourself.
You're not an idiot consumer. You're uneducated in that field.
You didn't see what I saw, and it was heartbreaking.
It
so
was horrible.
if you get that insurance on your iPhone, right, to replace your iPhone, it's like $7 a month, right? For like if you get
think
the
it's $15
if you get the insurance,
If
you
they
get
honor the
renter's
claim,
insurance,
Right.
I'm just saying I may have a pending lawsuit against AT&T.
if you have a fire,
If
it's
you
hard
happen
not
to
honor.
lose your iPhone, right?
And
Let's say in the fire you lost your iPhone, we're gonna replace it, right?
Right.
Minus your deductible, but you know you're only paying $7 a month for just to protect your
You
iPhone.
insure cell phones?
Well, what happens is in the renter's policy.
Talk about diversification.
So, just we're gonna
wire so much.
start wrapping up, but I just want to know, how do you feel about the next 3 to 5 years? What are you going to be doing to like make sure that you are done? What should other people be doing?
3 to 5 years. How about next 3 months?
Panic.
Next 3
Sell
months.
as fast as possible and go rent and pay more
But
for
is
rent.
there anything to do in the next 3 months?
There's tons of things to do. Look for opportunities. Educate yourself. Get other licenses. It's a great time to go back to
Yeah.
school.
Yeah.
It's a great time to start.
RECareerCenter.com.
It's a great time to start reading about what else in your real estate field can you do. Can you do mortgages? Can you do insurance? Can you become an appraiser? Can you do BPO letters? Can you become an investor?
Can you be
There
like
are
Crystal and
many
be a
different
notary
options.
too,
Can you be
right?
a notary? Can you be
Yeah.
a signer?
Yeah.
Can you go into commercial? A ton of great opportunities. We actually have an amazing video which you need to check out. It's why do commercial? It's on our channel, and that will give you a whole perspective of commercial real estate, and it will let you see where some of the extra opportunities are.
Yeah.
So, any final
Guys?
comments?
Yeah. Final comments, guys.
I think recessions are a great time to make money.
Agreed.
And a lot of people build their wealth in recessions, not during booms.
There you go.
I like that.
Yeah.
100%.
Do you have a statistic on that?
G7.
I wouldn't say statistic, but I'll tell you, everyone I know who's been in real estate for at least 10 years would agree that if they just did a few things differently 10 years ago, they'd be multimillionaires and retired today.
You only know Eric and me.
In recessions.
No, 100%. I think that's words of wisdom right there. Just take advantage of the situation that's happening. You know, just work with what you have.
Right,
So things are going to
lemons is
change, and
lemonade.
just adapt and change for what's going on right now in that current market. And just don't be, you got to take risks, right? So don't be afraid to take a risk. When the market's down and we're in the middle of the recession, if you have some extra capital, and you want to invest, take it, do it. You know it. You have a piece of property. You have something tangible that is going to go back up in value at some point. You just got to be able to hold on to it.
Omar.
Going into the recession, do not reduce your insurance. Your insurance is literally your risk management tool. So we're talking about investment, and you're obviously there's a level of risk with all investments. So if you don't properly insure and protect your investment, then what are you doing? The recession. The recession, yes, can reduce your investment, but if you don't have it properly insured, a fire can take out your investment. That can happen anytime.
True that.
So don't forget, if you visualize it, you can own it. So please subscribe to our YouTube channel.
Oh, it's YouTube Center for Real Estate Education.
Wow,
Right. I was like, what?
And check out our videos. We have some amazing commercial videos out there that will help you just with diversification. And diversifying is the way to go.
Yep.
So check out our videos.
All right. Bye, guys. Mwah.